Hi friends, today we are going to discuss about the basic accounting terms. These terms are very important to understand before we initiate about doing any type of accounting. So let's begin with our first concept is about entity. An entity is an economic unit that performs the economic activities. Now here the word economic activities have been highlighted. So what are economic activities? Any activities for which I receive money. Okay, for example, I give my services to someone and in return I get money. It is known as the economic activity. For example, I am a teacher. If I am rendering my services to the students in school, what am I receiving? I am receiving my salary. So this is an economic activity. Whereas the same services when I provide it to my children free of cost, it is not known as economic activities. It is rather non-economic activity. So I hope you've understood what is economic activity. So an entity can be, example, any industry, say Reliance Industry, Tisco or Birla Industry, etc. Then are your vouchers. Vouchers are the very beginning from where the accounting starts. For everything, for every entry, for every transaction we do in a business, we need to have the vouchers. Now what are the vouchers? It is a document that serves as an evidence of transaction. That means that transaction has taken place and I can prove it. This is the evidence of the transaction. It also acts as a source document on which the transactions are recorded in the books of accounts. Okay, if I have a voucher, then only I can record it in my books of accounts. So these serves as an evidence. Now here there is one of the vouchers I've taken. In this voucher, this is a cash memo. Okay, cash memo is when I sell my goods and services on cash. So here we can see, here is the name of the company, the address of the seller, right? Here is a voucher number. Every voucher has a number. Supposedly the voucher number of this cash memo is 1. Okay, so the voucher number of the next voucher will be voucher number 2. So these has to be sequential in order and then only I can pass any entry in accounting. Then over here we can see it is a date on which the voucher has been passed. Here is the buyer's name and the address. Here I am going to write the description. Supposedly say pens, paper, pencils, erasers, whatever I have sold. Here I will have the quantity, say 10 quantity of pens and so on and so forth. Here is a rate and then I will multiply both of these to get the amount. So I hope you've understood what are the vouchers and how it looks like. Next are the assets. It's a very important term in accounting. Now let's see what the definition says. These are the tangible objects or intangible rights of an enterprise which carry probable future benefits. Now what are tangible objects? Tangible objects are that I can touch and I can see. These are the tangible objects. For example, furniture, computers, laptops, etc. And what are intangible rights? Intangible rights that cannot be seen and touched. For example, trademarks, copyrights. These we cannot see and we cannot touch, hence these are known as intangible rights. So what are assets? Assets are basically the tangible and or intangible rights of an enterprise that carry probable future benefits. That means supposedly I have purchased a machinery, say for rupees 10,000. Today I have purchased a machinery for rupees 10,000. The benefits I am going to reap up from this machinery will be for more than 1 year, for the upcoming future years. That is why this is the asset to me, right? Because it is giving me benefits in the probable future years. Now we can see that the assets can be classified into current assets and the fixed assets. Basically the current assets are in the form of cash. Okay, for their conversion into cash, say bank, if I have some bank savings in my bank account, that can be easily converted into cash. Further, for their consumption in the production of goods or rendering services. For example, I have raw material in my industry or an enterprise. I have some raw material that can also be easily converted into cash. So these are the current assets. And what are the fixed assets? Fixed assets are the assets that are held for the purpose of providing or producing goods and services, and those that are not held for resale in the normal course of business. Over here I have used the term normal course of business. What is normal course of business? Supposedly I have a business of pens. Okay, so I can say that in a month I have sold 10,000 units and procured the raw material of 20,000 units. So what is this? I am having the raw material, I am converting into finished goods, and then I am selling it. Okay, so I am doing it in the normal course of business. I am doing it every day, or say in a week. But fixed assets are not to be sold or purchased in the normal course of business. It is not a day-to-day affair. It's a big amount that is invested for the upcoming years. Now, if you have any confusion whether it is a current asset or a fixed assets, so these are the 3 questions that we can answer to know whether it is a fixed asset or the current asset. First, whether it is cash or the bank balance. Next question that we need to answer is whether it is expected to be converted into cash. Third, whether it is expected to be consumed in the production of the goods or rendering service in the normal course of business. Over here, if all the questions are negative, then it is a fixed asset. Otherwise, if any of the question is positive, if any one, say this is positive and other 2 are negative, it is going to be the current asset. We are going to take an example of this. See, over here I have taken cash, stock of finished goods, stock of raw material and work in progress, debtors, and land and building. Over here you understand what is cash. Stock of finished goods, that means I procure some raw material. Okay, every business procures some raw material, then some part of work has been performed on the raw material. After that, this raw material will be known as work in progress. When certain part of work has been performed on the raw material, it is known as work in progress. Finally, when the goods is ready to be sold, it is known as finished good. That means that good is ready to be sold, it is known as finished goods. Whereas debtors, what are debtors? From whom the payment is to be received. I have to take money from him because I have sold him on cash the goods, right? And land and building, you all understand. So we are going to see one by one. Cash. Question number 1. What was the question number 1? Whether it is cash, or bank balance, right? So let's see in the question, what does it say? Cash. Obviously it is yes. Okay. And in the finished goods, no, it is not cash or bank balance. Similarly, for raw material and the work in progress, no. And for debtors, no. Land and building, no. Okay, so first question only for cash. The question number 1 says yes and others no. Now let's see what is the second question. The second question was whether it is expected to be converted into cash. Let's see. What's the answer? Cash, it's already in cash. How can we convert it into cash? So it is no. Stock of finished goods, yes, because it can be readily sold. It can be readily sold. That is why it is yes. Stock of raw material and work in progress, no. Why? Because the work has to be performed. It is not yet finished. It is work in progress. The product is not yet ready, so we cannot sell it, so it cannot be converted into cash. Hence it is no. Next is debtors. Yes. Why? Because I have to receive money from him. I can ask him, yes, you should pay me today. So that is why it is yes. It can be converted into cash. Land and building, no. Alright. So let's see the third question that says whether it is expected to be consumed in the production of goods or services rendered in the normal course of business. Let's see. Cash, no. Finished goods, no. Stock of raw material and work in progress, yes. And for debtors and land and building, no. So over here what we have seen was, whenever all the three questions says no, then only it is a fixed asset. So over here only for land and building, the answer to all the three questions was no, hence land and building is the fixed assets. Have you understood? Now next very important concept is of the liabilities. Now what are liabilities? These are the financial obligations of the enterprise other than owner's equity or owner's fund. Now owner's fund or owner's equity is the capital that I have invested in the business. Other than that, whatever is the obligation, that means whatever are the dues that have to be paid by the enterprise are known as your liabilities. I hope you've understood, right? So we can see that liabilities are further classified into current liabilities and long-term liabilities. Now your current liabilities, same as the current assets, okay? Opposite, I mean to say it's an opposite of the current assets. Now let's see what is it. Liabilities which fall due for the payment in relative short period. This short period is determined as the one accounting period that comprises of 12 months. Okay, in India it is from 1st April to 31st March. So whatever liabilities are that are due in that short period of time, or we can say in one accounting period, it is known as the current liabilities. For example, trade creditors, right? Creditors to whom we have to pay within 12 months from whom we have taken a debt. Further, it is the outstanding expense, the expense that I need to pay as soon as it is possible. It has incurred but I have not yet paid that expense. That is the expense, outstanding expense. Another one is the bank overdraft. The concept of bank overdraft is, supposedly I have certain amount of money in my bank account, say rupees 10,000. I have 10,000 in my bank account, but I want to withdraw say 12,000. I want to withdraw more than that I have in my savings account. So this 2,000, the excess amount, is the bank overdraft. Okay. Another kind of liabilities is the long-term liabilities. Your long-term liabilities are the liabilities that fall due for the payment and these are the liabilities which do not fall due for the payment in relatively short period. The opposite of current liabilities is the long-term liabilities. For example, long-term loans that do not, for the long-term loans you do not have to pay within one accounting period. It can be paid over more than one accounting period. Hence it is the long-term liability of the firm. Now another concept is of the capital. In accounting term, I can easily say assets minus the external liability is equal to capital, right? What are external liabilities? The outsiders to whom I have to pay is known as the external liabilities. So in simple term, capital is equal to assets minus external liabilities. It is also the amount invested in an enterprise by the proprietor or the partner. Now you understand who are partners. When more than one person is involved in the enterprise, it is known as partner, and when only one person is operating the business, it is known as the proprietor or the sole proprietor. Okay, so whatever the amount is invested by either the proprietor or the partner is called the capital. Further, it is also the amount, this amount is increased by the amount of profits earned and the additional capital introduced. Supposedly initially I have invested 5,000 in my firm, okay, and this year I am investing 2,000 more, so my capital will be increased to 7,000 this year. Similarly, say I have invested 7,000 this year, and I have incurred 1,000 of profit. I can, of that profit can also be added to my capital, and hence my capital will be increased to 8,000, right? And how this capital can be reduced? This capital reduces with the amount of losses incurred and the amount withdrawn. Supposedly, I had 5,000 capital. Alright, but for say personal uses or any other reasons, I had to withdraw rupees 2,000. Hence, my capital will be reduced to 3,000. Right? And this capital is also known as the net worth or owner's equity. Now, next concept is of drawing. See, drawing the total amount of cash or goods. I'm using the term cash or goods or any other asset withdrawn by the proprietor or the partner for the personal use. Drawings are always for the personal use. Anything that you withdraw from the business for the personal use is known as your drawings. Next are your goods. See, any business that deals in any kind of object, any kind of a product. Say I am dealing with the pens. I manufacture pens and I sell the pens. So hence the item in which the enterprise deal. I deal in what? I deals in pen. Hence my goods will be pens. Similarly, purchases. Purchases are the total amount of goods obtained by the enterprise for the resale or for the use in the production of goods or rendering of services in the normal course of business. See, anything that is being procured or that is being sold in the normal course of business. I told you that say I am dealing in pens. I procure some raw material. That raw material pertaining to the pens, only to the pens in which I am dealing, will be called my purchases. Okay, the raw material pertaining to that will be known as my purchases only. Next is the sales. Sale is the amount for which the goods are sold or the services are rendered in the normal course of business. Sales. The term sales will be used only for the products or the services I am rendering to. I was dealing in this manufacturing of pens and selling of the pens. Hence, my sales will be of my pens. Now, stock. Stock is also known as inventory or the merchandise. This is the tangible property held for the sale in ordinary course of business or for the consumption in the production of goods or the services for sale. So whatever I have, supposedly I have procured some raw material. Raw material is lying with me. Alright, these are of three kinds. Stock is of three kinds: raw material, semi-finished goods and the finished goods. I have procured some raw material. Okay, and that raw material, I have performed some activities, I have performed some work on the raw material, hence it is called as the finished goods. And finally, the final product is known as the finished good of the firm. Next is our opening stock. Now, what is opening stock? Goods lying unsold at the beginning of the current accounting period. I told you accounting period comprises of 12 months. Okay, beginning from 1st April to 31st March in India. So over here, whatever goods are lying unsold in the beginning of the year is known as the opening stock, and the vice versa would be the closing stock. Whatever goods are lying unsold at the end of the current accounting period is known as the closing stock. Now, trade creditors. What are the trade creditors? The person from whom the amounts are due. From whom the amounts are due for the goods sold and services rendered on the credit basis. For example, I have sold goods. I was dealing in pens, so I have sold 10 pens to Mr. X on credit. Okay, 10 pens I have sold to Mr. X on credit, and the worth of these pen was say 50 rupees. Total amount that was due was rupees 50. So Mr. X is my debtor because he is supposed to pay me, from whom I have to receive the amount. Receive the due amount is known as my trade debtor. And in terms of the trade creditor, the person to whom the amounts are due for the goods purchased or services rendered on the credit basis. Now, trade creditor is a person to whom I have to pay. I bought some raw material on credit basis, say from Mr. Y. Mr. Y is my trade creditor because he is a person to whom the amounts are due. I hope there is no confusion about the trade debtors and the trade creditors. Further, we move to the trade receivables, or they are simply receivables. These include both trade debtors, we have already done this, and bills receivables. Now, what are bills receivables? We have one term that is known as bill of exchange. Okay, so whenever someone, if I have my trade debtor, he can give it to me in writing. He can give it to me in writing in a promissory note that I will pay you this much amount whenever you say, and that period is a stipulated period. Say for example, this is usually for a smaller period of time, say 3 months, 2 months or 6 months. Okay, less than one accounting period. So Mr. X, he was my debtor, right? He says, yes, I will pay you rupees 50 in say 3 months. So this is my, because I have to receive, for me it is receivables, and for Mr. Y it is bills payable. Understood? And payables, these also include both trade creditors and bills payable. If there's any doubt, you can comment and ask me anytime. Let's move. Next is the expenditures. Expenditures are the cost incurred in acquiring an asset or the services in the form of outflow or the depletion of asset or incurrence of the liability. For example, I have purchased say machinery. I have purchased machinery for 1000 rupees. What am I doing? There is an outflow. There is an outflow of rupees 10,000 also. Yes. And there is, or if I have, this is like when I have purchased in cash. But what if I have purchased on credit? There will be incurrence of liability because I have to pay that person in future. That is what is the liability, when we have to pay the other person for the dues. In the near future, it is known as the liability. And the income, what is income? Increase in the economic benefit during the accounting period in the form of inflow of assets or the decrease of the liabilities. Inflow of assets can be, I have my bank account. Okay, in bank account I receive some interest, so this is my inflow of the assets. And decrease of my liabilities, whenever there is a reduction in the liabilities, so it will be the income of the enterprise. Similarly, expenses, there is a decrease in the economic benefit during the accounting period in the form of outflow or the depletion of assets. Okay, my assets have reduced, so this is my expense and incurrence of the liability. Over here I want to tell you guys is, see, I've used two terms. One is expenditures and one is expenses. Always remember that expenses are for the shorter duration or for an accounting period only, whereas expenditures include acquiring assets, and that involves huge amount. I have not mentioned, see over here I have not mentioned this term in accounting period. So expenditures are always for more than one accounting period. So always remember this difference. Next is our net profits. Net profits are the excess of our revenues over our expenses. Net profits are the, net profit is equal to when our revenues are more than our expenses. Right? Now what are revenues? Revenues are generally our sales only. Sales of one particular product or the services that we are rendering, that the firm is being involved. Supposedly I was involved in producing pens and selling pens. Over here, whatever revenue I receive, whatever I receive from selling pens, only pens, is known as my revenue. Alright, I might receive something, say when I sell my assets, but that will not be my revenue. Revenue is always from the product or services that I render in the firm. Okay, and the vice versa would be when my expenses are more than my revenue, then it will be our net losses. And the discounts, you always know, discounts are the incentives to promote the sales or prompt payment by the debtors. Okay, to promote our sales, etc. These are known as the discounts. Now the very important term we are going to do is the double entry bookkeeping. Okay, this is the sole base from where our accounting is going to start. from the upcoming lectures, we are going to discuss how do we pass the journal entries, how do we make our ledgers, how do we make our accounts. But before that, we need to understand about the double entry bookkeeping. It is very important to understand. Now let's see what does this says. It says that system of accounting under which both the aspect, that is debit or credit, for every transaction are recorded. Okay, we record both debit and credit for every transaction. This is the meaning of double entry bookkeeping. This concept of debit and credit was given by Luca Piccioli. He is also known as the father of bookkeeping or the double entry bookkeeping. This question can also come in the exams. So every debt has equal, over here it should be debit. Okay, every debit has equal amount of credit, hence the total of all the debit must be equal to total of all the credits. In next slide you will be able to understand better. See, over here I say Mr. X sold goods for cash of rupees 1000 to Mr. Y. Over here we have two parties, one is Mr. X and one is Mr. Y, right? Now I can see there's a double effect in both the both the parties, right? Both the parties have the double effect. For Mr. X, what will he have? He has received rupees 1000, yes, and say for Y, he has paid rupees 1000. Similarly, Mr. Y has given goods worth rupees 1000 and Mr. Y has received goods worth rupees 1000. That means it is a dual effect. Something is coming in for Mr. X. What is coming in? Cash is coming in for Mr. X, and what is going out? Goods are going out for Mr. X. Similarly, for Mr. Y, what is coming in? Goods are coming in for Mr. Y, and what is going out? Cash is going out for Mr. Y. Another example we can see is Mr. X sold goods for rupees 1000 to Mr. Y on credit. Okay, over here it is on credit. So what will be the dual effect in the books of Mr. X? He has the acquisition of rights to recover 1000. Okay, over here what we can see is Mr. Y is a debtor of Mr. X. So in the near future he can receive rupees 1000 from Mr. Y anytime. And another thing is foregoing of the goods. He has sold the goods of rupees 1000 to Mr. Y. In the books of Mr. Y, we can say assumption of obligation to pay rupees 1000. In the near future, he is supposed to pay rupees 1000 to Mr. X. Hence, the creditor of Mr. Y is Mr. X, right? And also, Mr. Y has received goods of rupees 1000. So both the parties, okay, so what is coming in for Mr. Y? The right to recover is coming in for Mr. X. Right to recover 1000 is coming in, and what is going out? Foregoing of the goods sold. And for the Y, what is coming in? Goods. He has purchased goods, hence it is coming in, and what is going out? The obligation to pay rupees 1000 is going out. Alright, so that is for today. I hope you have liked this video. Kindly subscribe to it, and any doubts you have, you can post it in the comments. I will surely reply to it. Thank you.